Good morning, it's Tuesday, January 20th, 2026, and things are moving faster than your metabolism after 50, which is to say they're moving in unexpected directions and causing more problems than you anticipated. I'm William Lee, and I've spent more years analyzing financial markets than I'd like to admit, mostly because admitting it would require acknowledging how old I am and how many of those analyses turned out to be spectacularly wrong before eventually being right. But today, right now, this very moment, I need you to put down whatever you're doing. That crossword puzzle can wait. Your coffee will still be there in 20 minutes. And honestly, that email from your nephew about cryptocurrency can definitely be ignored because something happened on Friday afternoon that nobody's talking about. And it's going to change everything about silver, Greenland, and why President Trump's obsession with buying a giant ice cube in the Arctic suddenly makes more sense than your doctor's constantly changing advice about whether wine is good for you. While the entire world has been laughing at Trump's Greenland proposal, while every late-night comedian has been making the same tired jokes about ice and Vikings and whatever other stereotypes they could think of, while CNN has been running 24-hour coverage of Danish politicians being politely offended in that very Scandinavian way where they're upset but still impeccably courteous, something happened at exactly 4:47 p.m. Eastern Time on Friday that nobody noticed except people like me, who apparently have nothing better to do than read 89-page geological survey reports on a Friday afternoon. I'm talking about a document, a boring technical survey that was quietly uploaded to the US Geological Survey website, the kind of document that normally only gets read by geology graduate students who drew the short straw and government bureaucrats who fell asleep at their desks halfway through page 12. But buried on page 47 of this sleep-inducing masterpiece is a single paragraph that just destroyed the global silver pricing mechanism more thoroughly than your retirement account got destroyed in 2008. Except this time you might actually benefit if you pay attention. Before I show you what's in that paragraph, before I prove to you why this Greenland situation is not just Trump being Trump, but actually a calculated resource war that makes the scramble for oil in the Middle East look like a friendly game of Monopoly, I want you to drop a comment below and tell me if you even knew Greenland had anything valuable besides ice and polar bears. Because I'm willing to bet most of you, like most Americans, thought Greenland was just that big white blob on the map that you occasionally confused with Iceland, which is green, in one of geography's cruelest jokes. Here's what they're not telling you. And by they, I mean the mainstream media who are too busy covering whatever scandal happened on Twitter this morning to actually read government geological reports. The US Geological Survey, USGS for those of us who love acronyms almost as much as we love complaining about acronyms, in cooperation with Greenland's Ministry of Mineral Resources, which sounds like something from a science fiction novel but is apparently a real government department, just published a revised mineral assessment for something called the Citronen Fjord deposit in northern Greenland. Now, I know what you're thinking. William, I don't care about fjords, I can barely pronounce fjord, and I certainly don't want to hear about mineral deposits when I'm trying to enjoy my morning coffee. But trust me, you care about this one. This is page 47, and I'm going to read you the exact quote because this is official government data, not some conspiracy theory I found on the internet at 3 a.m., which is admittedly how I spend more time than I should. Quote, updated core sample analysis, utilizing advanced spectroscopy techniques, indicates previously undetected silver concentrations in the Citronen Formation, averaging 847 grams per ton, across an estimated 2.4 billion ton ore body. This represents a potential in-situ resource of approximately 2.03 billion troy ounces of silver, with a high degree of confidence based on 127 drill core samples analyzed between June and October 2025. End quote. Now, I realize I just threw a lot of numbers at you, and numbers before noon are nobody's friend, especially when you're over 50 and your brain doesn't process information quite as quickly as it used to, which is fine, because honestly, most information isn't worth processing quickly anyway. But let me translate that geological jargon into English. They found 2.03 billion ounces of silver in Greenland, in one deposit, just sitting there under the ice, probably wondering why it took us so long to notice it. Let me put that in perspective using comparisons that actually mean something instead of abstract numbers that make your eyes glaze over. Total global silver mine production in 2025, that's last year, the year we just finished, the year you can barely remember because they all blend together after a certain age, was 830 million ounces. This one deposit in Greenland contains enough silver to supply the entire world for 2.5 years. It's like finding out your neighbor's garage doesn't just have a classic car in it, but enough classic cars to supply every collector in America for the next decade. Except instead of cars, it's shiny metal that makes your phone work. The largest silver mine currently operating is something called Cannington in Australia, which produces about 18 million ounces per year and is considered absolutely massive by industry standards. This Greenland deposit is 113 times larger. It's not just big, it's not just huge, it's the biggest silver deposit ever discovered in the Western Hemisphere, and possibly anywhere depending on how you count Chinese deposits that may or may not actually exist in the quantities they claim. And here's what makes my blood run cold, which at my age happens more easily than it used to, but this time it's actually justified. This assessment was completed in November 2025. That's 2 months ago. The drill cores were analyzed between June and October of last year. The USGS has known about this for at least 3 months, probably longer if you account for the time it takes government bureaucracies to do anything, which is approximately 3 times longer than it should take. And this data gets published on Friday, January 17th, 2026, last Friday, 3 days ago, the exact same week that President Trump announces his renewed push to acquire Greenland and implements a 10% tariff on 8 European nations, including Denmark, which owns Greenland in the same way your adult children technically still own the stuff in your attic. Legally, yes. Practically, it's complicated. You think that's a coincidence? You think the timing of a geological report and a major geopolitical announcement in the same week is just random chance? Like when you run into someone you know at the grocery store? I have a bridge in Brooklyn I'd like to sell you, and also some oceanfront property in Arizona, because if you believe this is coincidence, you'll believe anything. This is coordinated strategy. This is the Trump administration, love him or hate him, executing a plan that's been in the works for months. The sequence of events this week is designed to apply maximum pressure on Denmark while simultaneously justifying the strategic importance to Congress and the American people, most of whom think Greenland is just ice and maybe some igloos, which aren't even in Greenland. They're in northern Canada and Alaska, but geographic accuracy has never been America's strong suit. Because when you tell average Americans that Trump wants to buy Greenland, they think he's lost his mind. They think it's ego. They think it's another real estate deal from a guy who can't stop making real estate deals even when he's president. But if you show them 2.03 billion ounces of silver, if you explain that silver is one of the most critical minerals for solar panels, which we need for green energy, for electric vehicles, which apparently we're all supposed to be driving soon, for 5G networks, which are supposed to make your phone faster but mostly just give you another G to complain about, and for missile guidance systems because apparently missiles need expensive metals to know where they're going, if you show Americans that Greenland has enough of this critical material to supply the world for years, suddenly the purchase makes sense. It's not ego anymore. It's not crazy. It's national security. It's strategic resource acquisition. It's the kind of thing that sounds very official and important when you say it in a serious voice. Now let me show you what's happening in the physical silver market right now. And I spent 3 hours yesterday doing this research, which my spouse pointed out is 3 hours I could have spent on literally anything else, including things around the house that need fixing. But priorities matter. And understanding silver premiums is apparently my priority. On Friday, silver closed on the COMEX at $93.67. That's the official spot price. That's what your financial app shows you. That's the numbers CNBC puts on their little ticker at the bottom of the screen while people in expensive suits yell at each other about stocks. But I spent those 3 hours calling dealers, checking websites, talking to contacts in the industry who probably wonder why I keep bothering them with questions. American Silver Eagles at APMEX, which is one of the largest precious metals dealers in the country, are selling for $109.47 per coin. That's a $15.80 premium over spot. That's a 16.9% premium. Canadian Maple Leafs at JM Bullion are going for $106.23. That's a $12.56 premium. Even generic silver rounds, the absolute cheapest form you can buy, the ones that don't have fancy government stamps and just look like plain silver discs, are selling for $101.67 to $104.67. That's an $8 to $11 premium over spot. These are not normal premiums, and I know what normal premiums look like because I've been watching this market longer than most people have been watching their cholesterol, which is to say decades. In a healthy market, premiums on generic rounds are $2 to $3. Premiums on government coins like Eagles and Maples are $4 to $6. Right now, we're seeing 2 to 3 times normal levels. The physical market is tight, supply is constrained, people are paying significantly more than spot price because they can't get metal anywhere else, like trying to buy toilet paper in March 2020, except this time it's silver and the panic is quieter but just as real. But here's where it gets absolutely insane, and I use that word carefully because I try not to exaggerate, though my children would probably dispute that claim. I have a contact who works in Arctic logistics. He deals with shipping for mining operations in northern Canada, Alaska, and Greenland. It's a very specialized field. Not many people wake up in the morning thinking, I want to ship heavy equipment to the Arctic, but apparently some people do, and I know one of them. And he told me yesterday, in a conversation I probably shouldn't be sharing, but I'm going to anyway because this is important, that private commodity traders and mining companies are quoting physical silver for delivery to Arctic ports, specifically Greenland, northern Norway, and the Canadian Arctic at $137 per ounce. $137, while your screen shows $93.67. That's a 43.33 premium over COMEX spot. That's a 46% premium. That's like if bread at your local grocery store costs $4, But bread delivered to Alaska costs $6, except instead of a 50% increase, it's a 46% increase, and instead of bread, it's a metal that modern civilization desperately needs to function. I asked him, because I ask questions. It's what I do. It's why I'm still awake at this age, instead of just accepting whatever I'm told. I asked him why anyone would pay $137 when the official price is $93.67. He said, and I'm paraphrasing because he used some technical language that even I didn't fully understand, he said because in the Arctic, silver is not a commodity. It's a strategic resource. And if you want to lock up supply before the US or China controls the entire region, if you want to make sure your company has access to this metal that you need for manufacturing, you pay whatever it takes. You don't negotiate. You don't wait for a better price. You pay. This is what economists call the breakdown of the law of one price, which is a fancy way of saying the same thing should cost the same amount everywhere after you account for shipping costs. But that's not what we're seeing. Look at these numbers and tell me if this makes any sense. Silver in New York trades at $93.67 on COMEX, but physical metal you can actually buy costs $105 to $112. Silver in London is $94 on the LBMA, but physical costs $108. Silver in Shanghai is $93 on international markets, but $107 for domestic Chinese buyers. And silver in the Arctic, if you can even get it there, is $137 for physical delivery. These aren't small variations like gas being 10 cents more expensive across town. These are massive dislocations. The global silver market is fragmenting into regional markets with completely different prices based on access, logistics, and geopolitical control. It's like if the United States had different prices for the same product in different states, except we do have that with gas and taxes, but this is worse because these are international differences and they're huge. Now let me show you the math on this Greenland deposit, and I promise I'll make this as painless as possible, because I know math after 50 requires either reading glasses or just accepting that some numbers are blurry, and that's fine. The Citronen Fjord deposit is located in northern Greenland at 82 degrees north latitude. For context, that's about 780 miles from the North Pole. That's really far north. That's so far north that during winter the sun doesn't come up for 4 months, and during summer it doesn't set for 4 months, which sounds like either a nightmare or a dream, depending on whether you're a morning person. The estimated resource is 2.03 billion ounces of silver. The average grade is 847 grams per ton. Now, I realize grams per ton means nothing to most people because we don't think in grams per ton, we think in, is this expensive or cheap? So let me give you context. A world-class high-grade silver mine is anything over 200 grams per ton. This deposit is 847 grams per ton. That's 4.2 times higher grade than what's considered world-class. This is premium silver. This is the kind of deposit that mining engineers dream about and then wake up disappointed because it doesn't actually exist, except this time it does exist, and it's in Greenland under a lot of ice. The ore body is 2.4 billion tons of rock containing silver, plus about 4.2 million tons of zinc as a co-product, which means when you mine for silver, you also get zinc, which makes the economics even better because you're selling two metals instead of one. The depth is 200 to 800 meters below surface, which is relatively shallow for a mine. Some mines go down 2 or 3 kilometers. This one could potentially be an open pit operation, which is much cheaper than underground mining because you're basically just digging a very large hole instead of tunneling through rock like a mole with expensive equipment. Now here's the economics, and this is where it gets interesting if you're the kind of person who finds economics interesting, which I am, though I'm told this makes me strange. At current prices of $94 per ounce silver, assuming all-in sustaining costs of $55 per ounce, which is high because operating in the Arctic is expensive, everything costs more when you have to ship it 780 miles from the North Pole and work in darkness for 4 months. The profit margin is $39 per ounce. You take the selling price of $94, subtract the cost of $55, and you get $39 profit per ounce. Multiply that 39 by 2.03 billion ounces and you get 79 on 17 billion in lifetime profit. That's not revenue. That's profit. That's money after expenses. That's the kind of number that makes mining companies weep with joy and investors start doing calculations about early retirement. At $120 silver, where I think we're headed in the next 6 months because of everything I'm about to explain, the profit margin goes to $65 per ounce. That's $120 minus $55 equals 65. Multiply by 2.03 billion ounces and you get $131.95 billion in lifetime profit. This is not a marginal project. This is not something that barely makes economic sense. This is one of the most valuable, undeveloped mineral assets on the entire planet, and whoever controls it controls not just enormous profit potential, but strategic leverage over 20% to 25% of future global silver supply. Let me explain why that leverage matters. And drop a comment below telling me if you're starting to understand why Trump's Greenland obsession suddenly makes sense, because I want to know if I'm explaining this clearly or if I've lost you in the numbers. Right now, at this very moment, the world faces a structural silver deficit that's getting worse every year, like your eyesight or your knees. Global silver demand in 2025 was approximately 1.1 billion ounces. That demand comes from multiple sources: industrial demand of 550 million ounces for electronics, solar panels, electric vehicles, medical devices, water purification systems, all the things modern civilization needs to function. Investment demand of 250 million ounces from people buying coins and bars and ETFs because they don't trust paper currency, and frankly, who can blame them? Jewelry demand of 200 million ounces because people still like shiny things. Photography and other uses accounting for another 100 million ounces. Add that all up and you get 1.1 billion ounces of total demand. Now let's look at supply, which is where things get uncomfortable. Global silver supply in 2025 was approximately 1.05 billion ounces. That comes from mine production of 830 million ounces extracted from the ground by people working very hard in difficult conditions. Recycling of 180 million ounces recovered from old electronics and industrial waste. Government sales of 40 million ounces from strategic stockpiles that various countries have been quietly selling off. Add that up and you get 1.05 billion ounces of total supply. Do you see the problem? Demand is 1.1 billion ounces. Supply is 1.05 billion ounces. That's a 50 million ounce annual deficit. That gap is being filled by draining above ground inventories, COMEX vaults, LBMA vaults, government stockpiles, ETF holdings. We're essentially eating our savings to pay current expenses, which is a strategy that works until you run out of savings, at which point you have a crisis. And those inventories are running dry faster than your enthusiasm for your doctor's recommended exercise routine. COMEX registered silver dropped from 140 million ounces in 2020 to 58 million ounces today. LBMA vaults have been drained by Asian demand. Government stockpiles are nearly gone. And demand isn't staying flat, it's accelerating like a car going downhill with no brakes. By 2030, according to the Silver Institute, which tracks these things professionally, global demand hits 1.5 billion ounces per year. Why the increase? Solar installations are tripling from 200 gigawatts to 600 gigawatts annually, because apparently we're serious about this whole renewable energy thing now. That's 100 million ounces of new silver demand just for solar panels. Electric vehicle production is growing from 15 million units to 50 million units per year, because gas cars are apparently going the way of VHS tapes and landline phones. That's another 40 to 50 million ounces of demand. 5G and eventually 6G infrastructure expansion adds another 30 to 40 million ounces. Add it all up, and 2030 demand is 1.5 billion ounces. But what about supply? Mine production from existing operations that are depleting will probably be 750 to 800 million ounces. Recycling might get to 200 million. Government sales will be negligible because governments have already sold most of what they're willing to sell. Total 2030 supply, maybe 950 million to 1 billion ounces. Demand of 1.5 billion. Supply of 1 billion. That's a 500 million ounce annual deficit. You cannot fill a 500 million ounce deficit by draining inventories because there are no inventories left to drain. You can't fill it by increasing recycling because we're already recycling as much as we can. The only way to fill that gap is new mine production. And the only mine large enough to make a meaningful dent in that deficit is Citronen Fjord in Greenland. At peak production, which would be 10 to 12 years from now, assuming everything goes perfectly, and we know nothing goes perfectly, this mine could produce 60 to 80 million ounces per year. That's 12% to 16% of the projected deficit. It doesn't solve the problem entirely, but it's the single largest potential new source of silver supply on the planet. And whoever controls it decides which countries and industries get access to that silver. If the United States controls Greenland, we prioritize American solar manufacturers, American EV makers, American defense contractors, the US Mint. We refuse exports to China or make them prohibitively expensive. We use it as leverage in trade negotiations. If China controls Greenland, and they're trying, we'll get to that in a moment, they do the same thing to us. They prioritize Chinese industries. They restrict U.S. exports. They create a choke point where American technological development depends on Chinese-controlled Arctic silver. That's the strategic reality we're facing, and it's why a boring geological report suddenly becomes the most important document published last week. Now let me show you what happened in the last 72 hours, because this is where it goes from interesting to, oh my goodness, we're watching a geopolitical chess match in real time. On Friday, January 17th, the same day the USGS report was published, the Chinese Ministry of Natural Resources held a closed-door emergency meeting in Beijing. I know this because I have sources in the Chinese mining industry who apparently trust me enough to share information they probably shouldn't share, which either speaks well of my relationship-building skills or poorly of their operational security. According to 3 separate sources, The meeting included executives from Chinamin Metals, the state-owned mining conglomerate that's basically the Chinese government wearing a corporate suit. Representatives from Zijin Mining Group, one of China's largest precious metals producers. And most importantly, representatives from the People's Liberation Army Strategic Support Force, which is the military division responsible for securing critical resources and sounds exactly like something from a Tom Clancy novel, except it's real. The topic of this emergency meeting? The Greenland silver deposit and how to prevent exclusive U.S. control. Within 24 hours, on Saturday, Chinese state media published an op-ed in the Global Times, which is basically the Chinese government's unofficial mouthpiece for saying things they want to say without officially saying them. The article was titled "Arctic Resources Belong to Humanity, Not Hegemons," which is diplomatic language for America better not think they can just take this. Here's a key passage, and I'm reading directly from the translation. As climate change opens new frontiers in the Arctic, certain nations are attempting to monopolize strategic resources under the guise of sovereignty and security. The international community must ensure that Arctic mineral wealth serves all of humanity, not the narrow interests of declining empires. The article doesn't explicitly mention the US, Greenland, or silver, but you'd have to be deliberately obtuse not to understand what they are talking about. This is China signaling they will contest any US monopoly attempt. This is economic warfare disguised as humanitarian concern. And within hours of that article, the Financial Times ran a story citing anonymous sources, which in journalism means people who will lose their jobs if we name them, that China is preparing a $300 billion infrastructure investment package for Denmark and Greenland. $300 billion. Let me put that in perspective. Denmark's entire GDP is $400 billion. Greenland's GDP is less than $3 billion. China is offering more than 100 times Greenland's annual economic output. It's like if someone offered to pay you 100 years of your salary right now in exchange for access to your backyard, except your backyard happens to contain enough silver to power the global economy. What does $300 billion buy? According to the reports, which may be exaggerated but are probably directionally accurate, China is offering to build deep water ports for container ships, international airports with runways long enough for wide-body jets, fiber optic cables linking Greenland to North America and Europe, roads connecting the scattered settlements across Greenland's coast, a renewable power grid with hydroelectric and wind, 5G telecommunications infrastructure, subsidized housing and public services. In exchange, China wants cooperative mineral development rights, which is diplomatic code for exclusive or preferential access to Greenland's silver rare earths and uranium. This is a geopolitical counteroffensive. On Saturday night, the White House convened an emergency National Security Council meeting. Topic: U.S. response to China's offer. By Sunday morning, leaks appeared because everything leaks in Washington. It's the one constant. And the Wall Street Journal reported that the Trump administration is preparing a counteroffer. $150 billion in infrastructure, military protection guarantees, including expanded presence and integration into U.S. missile defense, a pathway to Greenlandic independence with U.S. support, and exclusive U.S. mineral development rights for 50 years. Now, $150 billion is half what China offered, and you might think China's offer is better, but there's a trap here that the Chinese didn't account for. Greenland doesn't entirely trust China. Greenland's 56,000 people, mostly Inuit indigenous population, have been pushing for independence from Denmark for decades. But they're wary of becoming a Chinese neo-colony. They've watched what happened in Africa, where Chinese infrastructure investment came with debt traps, exploitation, and a loss of sovereignty. The U.S., despite all its faults, and there are many, is a known quantity. Greenland has had relations with America through Thule Air Base since 1943. There's cultural affinity, there's history. So even though the U.S. offer is smaller in dollar terms, it might be more attractive strategically and politically. Plus, if Greenland chooses the U.S., they get military protection from NATO. If they choose China, they risk sanctions, isolation, or worse. Greenland is caught in a superpower bidding war, and their choice will determine the balance of power in the Arctic for the next century, which is a lot of responsibility for 56,000 people who just wanted to fish and hunt caribou in peace. Now, what does all this mean for the silver price that you see on your screen or in your app or wherever you check precious metals prices, probably more often than you check your email? The COMEX shows 93.67, but that number is increasingly meaningless. It's a paper price based on futures contracts where only about 2% result in actual physical delivery and the rest get cash settled, which means no metal changes hands, just money. The real price, what you actually pay to get metal in your hands, is significantly higher. US retail is $105 to $112. Shanghai is $107. The Arctic is $137. This is what's called market bifurcation, which is a fancy economics term for the market is breaking into pieces with different prices. And as the Greenland competition intensifies, as the US and China both try to secure access, this bifurcation is going to get worse, not better. Let me show you 3 scenarios for how this could play out, and I want you to comment below telling me which one you think is most likely because I'm genuinely curious what people think. Scenario 1. US wins. The US and Greenland announce a deal. Greenland gains independence with US backing. The US gets exclusive mineral rights for 50 years. What happens to silver? COMEX might actually drop short-term to $88 or $85 as traders assume eventual new supply coming online. But physical prices stay elevated because that supply is 10 years away minimum. The real impact is on China. If the US controls Greenland and refuses to export to China, Chinese domestic prices spike to $120, $130, maybe $140 as Chinese industries scramble for alternative sources. You'd have massive arbitrage where silver is $85 in New York but $140 in Shanghai, except you can't exploit that arbitrage because the US won't allow exports. It's like knowing bread is cheaper in your town than the next town over, but there's a wall preventing you from buying it and reselling it. Scenario 2, China wins. China and Greenland announce a deal. Greenland becomes independent with Chinese backing. China gets preferential development rights. Shanghai prices stabilize or even drop because China has secured future supply. But US prices spike. American industries panic. Tesla, solar manufacturers, defense contractors realize they're dependent on Chinese-controlled silver for their entire supply chain. US domestic prices go to $120, $130, $140 as companies desperately stockpile before access gets cut off entirely. COMEX becomes irrelevant because nobody trusts paper contracts when physical supply is controlled by a geopolitical rival. Scenario 3, stalemate. Neither side wins outright. Greenland remains autonomous, doesn't fully commit to either superpower, accepts investment from both, maintains control over its own minerals. This creates maximum uncertainty. Silver goes vertical because nobody knows who gets future supply. Both the US and China start hoarding physical metal. Both markets see prices of $120, $130, $140. COMEX and LBMA lose all credibility. We enter a world of regional markets with wildly different prices and restricted flows between them, like the pre-globalization era except with smartphones and the internet so we can all watch the chaos in real time. My personal belief? Scenario 3 in the short term. Greenland won't fully commit immediately. They're going to play both sides, take investment from both, maintain optionality, and milk this situation for everything it's worth, which honestly is the smart play if you're Greenland. And that uncertainty is going to drive silver significantly higher over the next 6 to 12 months. Now let me address the absolute nightmare of actually developing this mine, because it's one thing to find billions of ounces of silver, it's another thing entirely to actually extract it from under 780 miles of Arctic ice. Citronen Fjord is at 82 degrees north latitude. The North Pole is at 90 degrees. This mine would be 780 miles from the North Pole, further north than any currently operating mine on Earth. The Diavik diamond mine in Canada, which is already considered extremely remote and difficult, is at 64 degrees north. Citronen is 18 degrees further north. That might not sound like much, but those 18 degrees make all the difference. Winter temperatures are -40 to -50 Fahrenheit, which is cold enough that exposed skin freezes in minutes and machinery stops working. Summer temperatures are 35 to 45 degrees, which sounds nice until you realize the ground is permafrost year-round and everything has to be built on stilts or special foundations to prevent the heat from buildings melting the ground and causing everything to collapse. At 82 degrees north, the sun doesn't rise at all for 4 months in winter, late October to late February, and the sun doesn't set for 4 months in summer. Traditional work shifts based on daylight don't work. You either work in total darkness for months or 24-hour daylight for months, both of which mess with human psychology in ways that reduce productivity and increase accidents. The fjord where this deposit sits is ice-covered 9 to 10 months per year. Shipping is only possible for 2 to 3 months in late summer, July to September. That means all supplies, equipment, fuel, food, spare parts, everything needed for an entire year has to be shipped in during that tiny window and stockpiled. If you forget something or run out, you can't just order more. You wait until next summer. Currently, there's no infrastructure near Citronen, no roads, no airports that can handle large cargo, no ports, no power generation, no workforce housing, no hospitals. Everything has to be built from scratch in one of the most hostile environments on Earth. What's needed? A deep-water port for 50,000-ton bulk carriers, an airport with a 10,000-foot runway for 747 freighters, 200 miles of all-weather roads, 500 to 800 megawatts of power, probably from diesel generators or possibly a small modular nuclear reactor, processing facilities for crushing, grinding, flotation, and smelting, a workforce camp with housing, dining, and medical facilities for 2,000 to 3,000 workers, environmental systems for waste management, water treatment, and tailing storage. Total capital cost, $10 to $15 billion. Construction timeline, 7 to 10 years from project approval, and that assumes everything goes smoothly, which it won't. There will be environmental opposition. Greenpeace and World Wildlife Fund are already mobilizing against this. They're arguing that mining destroys pristine Arctic environment, disrupts caribou migration, pollutes rivers, contributes to climate change. And they have valid points. The ecological impact would be significant. But here's the brutal counter-argument. The world has committed to reducing carbon emissions through renewable energy. That requires solar panels, wind turbines, electric vehicles, batteries. All of those technologies need silver. Massive amounts of silver. So we have to choose mine Arctic silver and accept environmental impact, or fail our renewable energy targets and accept runaway climate change. There's no perfect solution, only trade-offs. And whoever controls Greenland makes that choice for all of us. Now I want to address the skeptics, because I know some of you are thinking, William, this sounds too good to be true. Geological reports are often wrong. Maybe this deposit doesn't actually exist or isn't economic. Let me respond to those concerns because they're fair. The USGS report states 847 grams per ton based on 127 actual drill core samples. That's real data, not speculation. That's physical rock that was pulled out of the ground, analyzed in laboratories, and verified. And 847 grams per ton is extraordinarily high. First Majestic Silver operates mines in Mexico at 200 to 350 grams per ton, profitably at current prices. Citronen is 2 to 4 times higher grade. Yes, Arctic logistics are expensive. Yes, capital costs are higher than normal mines. But at 847 grams per ton, even with a $20 per ounce logistics premium for operating in the Arctic, this mine is highly profitable at any silver price above $40. We're currently at $93. This mine prints money at current prices. This is not marginal economics. This is a world-class deposit in a difficult location that's still worth developing. Some people say it takes a decade to develop, so it doesn't matter now. Wrong. Markets are forward-looking. Knowing there's a 500 million ounce annual deficit building over the next 10 years with only one large potential supply source that's controlled by geopolitical rivals changes everything right now. The mere existence of this deposit matters because it's the only viable solution to the coming shortage, and if it's controlled by an adversary, that fundamentally changes strategic calculations for every silver-dependent company and country today, not in 10 years. Others say the US can't actually buy Greenland because Denmark won't sell. Partially true, but the US doesn't need to buy Greenland outright. There are multiple mechanisms. A 99-year mining lease with Greenland's government, financing Greenland's independence in exchange for exclusive mineral rights, or a joint venture where the US provides capital and Greenland provides land and resources. Trump's buy Greenland is a negotiating tactic. It's the opening bid. The real deal happens behind closed doors, with lawyers and diplomats working out details that never make the news. My personal strategy, and I'm sharing this not as financial advice, but as what I'm actually doing with my own money that I can afford to lose. First, I'm holding all my physical silver. Not selling until we hit $120 to $130. If we're entering a world of regional pricing, where physical trades at 20% to 50% premiums over COMEX depending on location, my stack is significantly more valuable than the paper price suggests. I'm not holding a commodity anymore. I'm holding strategic inventory in a fragmenting market. Second, I'm watching silver mining stocks closely. If we gap up Monday morning on Greenland news, I'm holding my positions. If we pull back to lower levels, I'm buying more because miners are still priced for $50 to $60 silver when actual physical is trading at $105 to $130. That's a massive valuation disconnect that will eventually correct violently upward. Third, I'm monitoring the negotiations daily. I've set up Google alerts for Greenland mineral rights, China-Denmark investment, Trump-Greenland deal. If a US-Greenland deal gets announced, I'm buying more physical immediately. If a China-Greenland deal gets announced, I'm buying more miners. Either outcome confirms that silver is a strategic asset, not just a commodity. Strategic assets trade at premiums. And I want to hear from you in the comments. Do you own physical silver? Are you thinking about buying some after hearing all this? Do you think I'm completely insane and this is all nonsense? Whatever you're thinking, drop a comment below because I genuinely read them and I'm curious what people make of this situation. This is William Lee, still trying to explain complicated geopolitics and commodity markets to people who probably just wanted a simple answer about whether silver is going up or down. We are living through the beginning of an Arctic resource war. The media is laughing about Greenland, the Pentagon is strategizing, the Chinese Communist Party is mobilizing, and if you're still paying attention at this point, you understand something that most people don't. This isn't a joke. This is the beginning of a fundamental restructuring of who controls critical resources for the next century. Silver is the prize. And the price is going to reflect that reality whether the COMEX admits it or not. Stay sharp out there, hold your silver, and I'll see you in the next one when this situation inevitably gets even more interesting.